And we're back. Welcome back to the Retirement Decoded podcast with Scott Tucker. I'm your host, Scott Tucker. TuckerRetirement.com. You can see our phone calendar or click and pick a time on our phone calendar. We'll spend 15 minutes for free with you in the coming week with one of our financial planners. Max will get their questions answered, and
answers questioned always. That's my favorite part.
Max will get their questions answered and
answers.
Their answers questioned.
Yeah, isn't that what I say?
Sort of.
Okay.
We'll get your questions answered and your answers questioned.
There we go.
I'm Casey Kasem. We have a Casey Kasem story we won't retell. We have a Sunday morning radio show in Chicago on WIND, and radio producer man extraordinaire Keith Conrad is sometimes on that program with us. Mm-hmm. Keith Conrad grew up in. I guess I will tell the story a little bit. Keith Conrad grew up in Huntsville, Alabama, northern Alabama. They call it Rocket City. It's where all those rocket scientists are. So Keith's dad was a rocket scientist. Once a rocket scientist, always a rocket scientist. That's what Keith says. So Keith Conrad went to University of Alabama, Huntsville, UAH, and he studied broadcast media or something. So he got a job. Keith got a job, like some kind of like interning or low-paying job in Huntsville at the radio station. Mm-hmm. And back in Keith would have probably been around the year 2000. Yeah, he said it was around the year 2000. They still had Casey Kasem's weekly top 40. Now, I'm 53 years of age. If you're my age or more experienced, you remember Casey Kasem in the weekly top 40. It was on every Saturday or Sunday, and it was like a 3-hour show.
Oh, wow.
And you didn't have so much of the interwebs. You kind of did and kind of didn't. And you'd listen like, oh, is this show? Oh, my favorite song last week was number 7 on the chart. So will it be number 5 this week? Where will it be?
Yeah.
Well, this is a horrible thing, but in northern Alabama, and I'm not saying that everybody from Alabama is like this, but the station owner down in Alabama had a station policy that Casey Kasem's weekly top 40 would not contain any black artists.
Oh, wow.
Have you heard this story before?
No, I haven't.
Keith has told this on the radio show a couple times. Yeah, I was like, he did this, and he said it was like roughly like 2000. And I'm like, isn't that crazy? That was only insane. 26 years ago. I know it was a long time ago, but that's still, it's like the Civil War was 150 years ago or something. I mean, we're still doing this. However long ago, longer than that. Way longer than that. Jeez, the math is giving me an extra headache. Like almost 170 years ago, something like that. Get the calculator, you told me. So the station owner in Huntsville, Alabama would have poor Keith Conrad, the underpaid or non-paid intern or low minimum wage guy. Mm-hmm. He's like, Keith, you got to cut all the black artists out of the Casey Kasem weekly top 40. But the station ownership had already signed an agreement with Casey Kasem that they would play the whole show in its entirety and only run the spots where they're supposed to run the ads where they're supposed to run the ads. So the joke is, and it's not a great joke. It's kind of a painful thing to even hear that somebody would do that, but it's not a golden rule moment, is it? Treat others if you'd like to be treated.
That's insane.
Yeah, I mean, what
2000 they're doing that?
In 2000.
It was Bama though. So
yeah. Oh, jeez. I've been to Alabama when I was in the Navy. I used to station in Pensacola, Florida, in the Panhandle.
Yeah, great spot. I love Pensacola.
I didn't see or hear of these things. I didn't notice this, but I was just passing through. In Pensacola, certainly nobody behaved like that.
Yeah, you're a white guy too. So
well, I wouldn't notice it as much either, I guess. So the kind of the joke, it's not a great joke. It's not a PC joke. It's not a happy joke, but make lemonade out of lemons. So Keith would say, so it was like Casey Kasem's weekly top 27. It was probably less than that. There's probably like an hour left of the show after you cut out the black artists. No, this was about the time that they had Snoop Dogg and Dr. Dre and stuff.
Yeah, NWA.
Well, and NWA is not going to be on the radio like that, but they had there might be the Fugees maybe, or well, that's a little Fugees were a little bit before that, but like say like Snoop Dogg, Dr. Dre stuff was kind of probably around there. But Keith said they had no trouble with Eminem. Like, which I don't even like Eminem. I think he's kind of annoying to me. Some people like him. Natalie loves Eminem, thinks he's the greatest. But so Eminem being a white guy, his song would play. But if there was like Snoop Dogg, his song would not play.
Jeez.
Isn't that something?
Yeah.
So Casey Kasem's weekly top 27. I don't know where we're going with that. Anyway, it's supposed to be a retirement planning podcast, isn't it?
Yeah.
But when I think of weird stories, I just have to repeat them. Even the ugly stories like that, it's like kind of strange.
Well, it's better to talk about it than try to act like it never happened, right?
That's the truth right there. Like when I was growing up, they taught very heavily the Holocaust, even though I didn't grow up in a Jewish area.
Yeah.
But it was important for the white cat. I grew up in a pretty white little town outside of Lansing, Michigan, DeWitt, Michigan, home of the DeWittians. and at least a farm town that turned into a suburban town. So, but we taught very heavily the Holocaust, even though it was like white Catholics and white Methodists and white this and white that. I had one or two black kids who were friends in that school, a couple of Jewish kids, and that there was like 2 or 3 Jewish families in the whole town that I was aware of. As far as kids I knew, I played hockey with one of them, and but it was good to teach the kids the ugly stuff rather than, I'm concerned right now that we're trying to teach things so PC that we're not showing the ugly parts.
Yeah,
we're not talking about the ugly parts of slavery in our country, or the ugly parts of the Civil War, or the ugly parts of the Holocaust, and if you just give people like that surface level, if everything's like just almost like some of these movies about World War II are almost like sitcoms,
It's like our whole society, we've just like become scared to talk about stuff in general. We've just become real scared about everything.
Yeah.
Kids aren't having sleepovers anymore. They're not doing trick or treating anymore. It's just
we don't want to have the tough conversations.
It's like we've gone a crazy town and we never left. So what are we doing, guys?
I don't know. We have a question. Now we're in Chicago. We're near O'Hare. In fact, the name of our office complex, there's these 5 buildings. We're in a 10-story building that has Valspar on the 10th floor. That's the paint company. And then I think it's 9th floor or below is the Ram McNally. So on our building, it says Valspar on one side, Ram McNally on the other side. And it's only like a 7-minute Uber ride over to O'Hare International Airport and all that. So it's called O'Hare Plaza. And so we do have folks locally that write us a lot of the questions, but we can help U.S. citizens and green card holders all throughout the United States and its territories. So get on our phone calendar at tuckerretirement.com. We'll talk about it. Today's question comes from Susan in Arlington Heights. Now, Arlington Heights is not far from us. Those of you in Chicagoland know where it is. So Arlington Heights might be 25 minutes from our office, if it's that. Susan from Arlington Heights says, Max, the market feels risky right now. Should I move my retirement accounts to cash?
Oh, gosh.
Go to cash,
Max?
Max?
My favorite conversation as a financial advisor is talking about this and having this conversation. So,
well, Max, what is one of the problems if Susan in Arlington Heights puts all of her retirement account in cash? What's a problem there?
Oh, man, I'm going to jump on my soapbox here because this is in my previous role where we only had clients in the stock market. We talked about this quite a bit, but one of the problems, Scott, is usually after the biggest down days, you have the biggest up days. Mm-hmm. Historically, if you miss the 5 to 10 biggest up days in the market for a year, your average rate of return is something like 5% less than what it would have been. So you often miss those big rebounds. There's this saying, what falls the most bounces the most. So that's one thing. Another thing is if you go to cash, when do you get back in the market, right? So.
And you were saying, so Max used to be at another firm before us, and there's a firm that was really big about put it all in the market, keep it all in the market. The gentleman who owns that firm is worth $20 billion. So if he goes from $20 billion to $10 billion, he's still got $10 billion to buy bread, milk, and eggs.
Yeah, he's okay.
He's going to be all right. So we help a lot of folks that are quite affluent and a lot of folks who aren't quite affluent. We've had folks, this is on the very lower end of, we don't aim for this. We have folks that have been clients, became clients years ago with like $250,000, and we've been able to help them. And this is not always a guaranteed outcome, but we've been able to help them get through things where they still have about the same amount they started with, even though it's been about 10 years of retirement. I can never guarantee market returns. Can't even guarantee what the tax rates will be tomorrow. But it is possible for a lot of folks to make 250 go a long ways, 250,000. We have other folks that, once folks get above about 5 million saved for retirement, they feel less pain and they call on us less. But we have clients that have $5 million saved for retirement, and we sit down with folks regularly that have, say, $10 million to $30 million. And the $10 to $30 million folks are the hardest to help because they don't feel pain, they don't feel fear.
Yeah.
If they can sleep at night, now they say they can, but when the stuff hits the fan, when they go from 30 million to 15 million, they start freaking out.
The big thing is a lot of these people, they don't have a plan in place before that does happen. So when it does happen, they do emotional decisions that really hurt them.
Yeah.
Kind of like with the question today, going to cash.
Yeah. So Susan, what I would prefer, so like Max talked about a couple firms back, he was at a firm where they say, just put it all in the market, keep it all in the market. Don't call us to say anything about selling anything. Just keep it in the market. In fact, you have more money when the market's down. better to have an investment plan before that. So what we try to do is put a hedging strategy on some of your money so the market falls, you don't lose anything. And then some of the money we could have in a low volatility portfolio. We always want to have all of that money have the opportunity to increase in value. And we want to have the opportunity to lock in gains at good times so that when there's a market dip, you don't see so much of a dip, potentially. I have to say potentially. Compliance loves it when I say potentially. They hate it if I don't. You don't see so much of a dip if you have some hedging strategies in place, right? You could your advisor could put options on your portfolio. There are a number of other ways they could do that sort of thing. So there's not such a dip when the market if there's a market crash for you, and not so much of a bumpy ride. You want to have some good shocks on your car. Like when you see those little tuner cars, they have those little Hondas, and they lower the car and they take the shocks out and it rides like a skateboard and it's real jittery.
Yep.
You don't want that ride on your spine if you have a spine like mine. My bumps and bruises. It's cool when you're 25. When you're 65, you don't want to be riding down the road on like a 80 mile an hour skateboard over the potholes. And so, Susan, what's probably best to do is when markets are high, it might be just a great time to do this, or any time, put some shock absorbers in there, put some hedging strategies in place, maybe have your advisor write some put options, which can eliminate the downside of market risk there. And then, just going from stocks to cash. One of the big things, Max, is the down day could happen and you could sell at the bottom.
Yep.
And then they could bump back up and you could have your cash. And as you're trying to redeploy the cash in the market, it could have a run up and you don't get great execution when you're doing this at home on Vanguard.com or whoever.com. Really hard to beat Wall Street from Main Street.
You have no shot.
No shot. There's, even so in Wall Street, what they'll do is the big firms down there, they'll set up either in the same building or a next door building with fiber optics, with high speed computers, with like those NVIDIA chips.
Yep.
They'll trade. They have computers trading against computers. If you're even across the street next to the Fidelity or the Schwab or whatever office, and you're maybe even you do have fiber optic, but you're there in your MacBook, pokey, typing in with one finger on each hand. You're actually, people don't realize this, they're trading against computers more and more.
About 99% of the trading in the markets right now is all high frequency trading. So a lot of people don't know what you're trading against right now. It doesn't matter. You don't have a single shot. Shot being the market or being those people. It's
algorithmic.
Yep.
And so you're trading against an algorithm. You're not even trading against it's impossible. It's like a robot.
Yeah.
It's like a high-speed robot, and you're trying to beat it to trades. And what it's doing, they call it playing the tape back. So another example, in Chicago, we have the options exchanges, or downtown Chicago. This is where you hear, it depends on what radio station. They didn't do as much as they used to, but when Illinois was more, they had more talk about farm prices. And because now I think a lot of the farmers have it on their phones. But they used to have like on a couple of the big stations downtown, the 50,000 watt stations that reach all of the rural states around, the rural areas. They'd say hog futures, pork bellies, or whatever per pound, and the soybean, October soybean is in the July corn is this. And so they're talking about, when they say that, are the prices at the Chicago options exchanges. And so there's a very wealthy person. He now lives in the Miami area. He bought a record at the time, or a couple of years ago, a record priced home in the Miami area. It was over $100 million, and they call it kind of a compound. It's right on the bay or on the ocean or whatever. His name's Ken Griffin. It's not the baseball. CEO. It's not the baseball player. It's not Ken Griffey Jr.
That'd be a cool one.
No, it's Ken Griffin. Ken Griffin founded Citadel in Chicago umpteen years ago. He's now probably 60 years of age. He's a multi-billionaire.
Yeah.
He used to be one of Illinois' richest people. Now he's one of Florida's richest people.
Because of our amazing tax code.
Yeah. So in Illinois, we have insane property tax, in Cook County especially, we have insane property taxes. On commercial, it's even worse than residential. Commercial property in Cook County is 2.5 times the tax rate as if the same dollar value as residential. So a lot of businesses don't want to be in Illinois. And also Illinois has a state income tax of 4.95%, where he was paying a tax of nearly 5% on all his income.
It's a lot of money
to the state of Illinois, and he goes to Florida.
Millions.
He goes to Florida. He pays zero state income tax.
How can you argue against that? You know, I do it too.
So what Ken Griffin's trying to do now is move all of Citadel down to Miami. They're building a great big brand new office tower, some crazy building down there. But what happens if you're trying to trade futures and beat Citadel? You really can't, because Citadel is they have a building right next to the Chicago Mercantile Exchange. I don't all the options exchanges have conglomerated so much.
Their Citadel's buildings is it's on Dearborn Street.
Yeah, it's right next to the exchange, right?
Tower. No, it's a little ways away. It's a couple blocks away.
Okay, but it's on fiber optic, and it's using like NVIDIA chips and stuff. And so I used to meet people some years ago, and I don't know if this is still a thing. Maybe about 10 to 15 years ago, I used to meet young people that work downtown, whatever, 25-year-old, and meet a guy somewhere and another's, and he'd say, I took a Dale Carnegie course. That's what it was. I met a bunch of like 25-year-olds, and I was probably 40, and it was downtown, and I met like multiple 25-year-olds in this class, and I go, "What do you do?" And the guy go, "I'm a trader." And I go, "Oh, okay." And then you see him the next week, and what do you do? He's like, "Oh, program the computer, run the tape back, and work for Citadel or one of the other companies." We have the whole tape of tape, so to speak, without tape, of the whole history of the trading of the options market. We record that, then we write a program to beat it by a millisecond on fiber optics with these computers. Yep. But we have to beat it by like a millisecond. We can't even beat it with our hands, so to speak, our brains in our hands. Right. So they are programming computers to be a millisecond faster than the computers were last week, and that's what they kept doing. So, and I finally, after this was a multi-week course. I can't remember how many weeks. It went at least like 5 weeks, maybe 8 weeks. And I came to figure out that none of them were traders. All of them were computer programmers. Yeah. They would call themselves traders, and that's probably how they got hired. Oh, you're going to be a trader, algorithmic high frequency trading. And all they would do is program the computer to beat the other computers. And so if you're in Des Plaines, Illinois.
Yeah, no shot.
We had a gentleman one time lived in Des Plaines, and he didn't have dial-up internet, but he had the low speed Comcast cable, not the high speed Comcast cable, and it's the Des Plaines to downtown. It's a half hour on a good day, and it's an hour with traffic.
Yeah, you got these high frequency trading firms spending billions, so their stuff's a millisecond.
And what they're doing is they're using those NVIDIA chips and that kind of a chip, so to speak, and then like the fiber optics and these 25-year-old programmers. Yep. There's no way you're going to beat them. Those programmers can't even beat themselves. They have to have the computer do the trades on fiber optic and those crazy deals.
And these people have research staffs of 200, 300, 400 people, where they're all looking at certain companies, certain sectors. They're looking at supply chains. They're looking at the balance sheets. I mean,
like Citadel will have a whole team that all they do is analyze the price of aluminum.
Yeah, they will. So Citadel has pods of certain teams of people where they're set up to watch things like that. Can you imagine 5 people just watching aluminum prices and aluminum all day?
Aluminum futures and what plant had a fire, what plant's expanding, and what country this and that, and whether the delivery timelines and what should the future price be of
So imagine 400 PhDs or people with mathematic degrees all looking at that, and all of a sudden you're watching Jim Cramer and you hear stock and you think you know more. So
Jim Cramer is good entertainment, but not probably good advice.
Yeah.
The Jim Cramer show, so when he goes on CNBC, he might have a topic in the morning and just something to ramble about.
Yep.
When he does he still do that evening show where he hits all buttons and says buy, says he'll sell and all that?
I have no idea. Needless to say, I don't watch them. So.
I'm not a big fan because he really gets people wrapped around the axle. He gives some advice that it's entertainment. It's not advice.
It's 100% entertainment. Yep.
Well, there's a reason why Jim Cramer no longer holds any securities licenses, is because he would have massive fines for saying what he says if he were licensed. But if he's unlicensed, he's an entertainer. So just think about that.
Yep.
The advice can be in some cases so poor that he could get sued for it if he had a securities license. So he gave up his securities licenses so he could make money as an entertainer.
It's funny you say that, Scott, because a lot of times when we sit down with folks and we see what they're doing, it's kind of the same situation. If we were doing what they were doing in their financial planning, we'd be setting ourselves up for a lawsuit.
Yeah, and we don't want to. So we are always careful to speak that a certain way too. But sometimes we've had some extreme cases where I have to speak it.
Yep.
We have a gentleman and his wife are now clients, but when they first came to us, he had their whole life savings in 3 tech stocks. And if something goes wrong here, you're losing at least half, and it can happen in like a day, 3 days, 5 days. And then does it come back, or do you wait 7 years, or what happens?
Yeah.
And so one way I've gotten through to a couple people, I don't like to say it, but sometimes people have to hear the truth, and that's what our job is. Sometimes I have to level of folks, say, listen, if I did with your money what you're doing with your money, I would lose my license. You would sue me rightfully and get a judgment against me. I could be in really big trouble for doing what you're doing with your money. So, there's a difference between taking $100 and going to Rivers Casino. I don't go there, but take $100, go to Rivers Casino. When you lose the $100, go home. Don't get more money out. Okay. Yep. There's your entertainment for that 5 minutes. You're done.
Don't gamble with your retirement portfolio.
Yeah. Don't take $1 million to Rivers Casino. All right. It's supposed to be, some of these things are supposed to be boring on purpose. Yeah. Your excitement probably ought to be, now we're not all so fortunate to have kids and grandkids and all this kind of thing. But if you're fortunate enough to have grandkids, that's a good place for your excitement. If you don't have any kids or grandkids, I grew up playing hockey, something I did when I got out of the Navy. I went and coached high school hockey for a season, and that was really a rewarding thing to do. Get your excitement in ways like that. Let's not get our excitement from gambling with our life savings.
Yeah, unless you've spent $100,000 or 100,000 hours into this stuff. Yeah, I mean, you're still a novice.
And even then, you're one person.
Yep, exactly.
Yeah. And so Susan, Arlington Heights, Max, the market feels risky right now. Should I move my retirement accounts to cash? There are some different risks that we haven't talked about. Being in cash, can you keep up with inflation? If you're in a non-qualified or non-retirement account, these cash instruments, you could be creating a lot of like CDs. You could be creating a lot of federal and state income taxes, different things like that.
Yeah, we saw a lot of this though in 2022. People moving to cash. After 2021, we saw more new investors ever in the market than we've ever had before. They're all chasing that big run up. And we saw 2022 come 30%, 40% haircut in tech. And then we saw all those same investors go to cash, lock in the losses.
There's a saying we have is people love to buy high and sell low.
Yeah, that's so true, Scott.
Yeah, everybody says they do.
More true.
Everybody says they do the opposite, but the human nature is you get scared. When you see something go up, you want to buy it at the top, and then when it falls, you get really scared and you sell low, and so you're doing the opposite of what you ought to be doing. That's one of the ways we help people the most, Max, is to get folks to not buy and sell at the wrong times. And we're not saying the market time, we're saying the not market time. What folks do when they manage their own money, they buy something that's exciting when it's high, and they sell it when they're scared.
Like NVIDIA. You guys should have been buying NVIDIA in 2013. Why are you asking me now to buy it? So
right now I'm buying at the top. Yep. Well, that's a wrap for episode 70 of the podcast. Go ahead and like and subscribe, share it on Facebook page or whatever you can do. Text it to a friend, email it to a friend. If you're listening to this, you're not seeing the video, these two handsome gentlemen, you should go to tuckeryoutube.com. At tuckeryoutube.com, you can see this lovely podcast on video every Monday morning at 0500 hours Central Time. And also get on our phone calendar at tuckerretirement.com. Max will get their questions answered and
answers questioned.
And their answers questioned. Max will get their questions answered and
answers questioned.
And their answers questioned. Got to add an and in there.
And, okay.
We'll do it next time. We'll try it on episode 71. Okay, we'll talk to you in the next podcast. Thanks so much.